In this video, traders, we're going to answer a question about using ATR in the Forex markets, which is 24 hours, so slightly different from basically the pit session in the Dow or the DAX. Stick around. Hey guys, warm welcome to you. So question from a subscriber. I appreciate all your questions, comments, support, all that other good stuff. So the question was, hey, you talk about ATR, as a reference to a video we talk about ATR, which is average true range, as a tool for understanding whether the markets are in kind of normal conditions, if you like. So normal conditions being, hey, if we are in the market's moved up, it stayed within its expected range. So average true range, say average true range is 100 pips, for example. If the market is staying within the 100 pip range, we're going to assume if the volumes, as it is, and I appreciate volume's difficult sometimes to get in FX, but if say the move of the candles, everything seems normal, if you like, then we're expecting a normal day. And I say normal as in a normal distribution. It's the kind of day that's going to sit between that 100 pip range. Maybe it's going to do 80, maybe it's going to 110. It's going to be around there. And so we can start to trade it accordingly. In other words, if it's up already 90 pips, are we going to look for a breakout trade? Probably not, because it's a normal type of day, and a normal type of day won't often give you 200 or 300 pips. However, there are some days that are outliers at the tails. Are they going to be very, very low range days, which we're not interested in, or very, very high range days? And so that might do the ATR, or the expected ATR, expected range, in the first kind of couple of hours, and then all of a sudden you know, it's because we had a catalyst from the ECB, we had a catalyst from the BOJ, this is where people are positioning, I need to now not be looking to fade this move, we're now in an outlier territory. The average true range is normally 100, we've done 120 already, it's just the first hour of the London session. Hey, I'm going to now look for kind of range expansion trades because this has changed the scenario of the day. And that's why ATR is so useful. It's so powerful because we can see, is this normal? If it's normal, then let's trade it accordingly. If this is abnormal, do we even want to trade it? Do we want to stay out? So the question was, what do you do about the 24-hour session in the Forex? Because, of course, difference compared to, let's say, if we're tracking the Dow cash or the S&P 500 cash or the NASDAQ index, there's a very specific time for it. Whereas Forex, what do? Do you do it from midnight to midnight? Do you do it from London session to London session open? How do you do it? And the answer to that is the easiest way to do it, of course, in my opinion. Okay, you guys try out little different things and see if you find a little strategy that works and a little quirk, then great. Stick it in the comments section below, helps everybody out. But I do it just literally saying, hey, it's default on the chart. You know how the charts work. They generally go from midnight to midnight on the daily candles in Forex. So the ATR is going to be from midnight to midnight. Now, is that perfect? Probably not, because as we know, we have the London session, we have a kind of US session, we have the Asian session, and even though there's some overlap as well, as we know, 8 o'clock to 4 o'clock UK time generally considered the London session. Some people say it's a little bit later, but there's the overlap as well from 2 o'clock UK time is potentially when the US gets in. So there is that overlap. So you can, if you want to be more granular about it, start to just, and you're probably going to need a little bit more programming skills or a little bit more time at least to work out the range. But if you work out the range of your Asian session, the London session, you might be able to say, hey, well, actually, listen, the normal range during the London session, which you've pinned at, say, 8 o'clock to 4 o'clock UK time, is 60 pips. Now we're doing 90 pips. Maybe the US session is going to have an expanded range. So you can use your 24-hour and say, hey, you know, I understand where we are now, but that might be a bit late to warn you that the day is quite interesting. Whereas if you split the day up into 3 and go Asia session, London session, US session, you might come into the London session going, hey, listen, Asia session was quite busy. It did quite a big range. Yes, on my 24-hour ATR, I'm still under my 100 pip range. However, if I look at my Asian session, and again, you're probably going to have to use different size candles to work this out, or you're going to have to plot a high or low and do maybe some manual work, but it could be worth it because then you go, right, hey, look, we normally only do 50 pips in the Asian session overnight for me anyway, if I'm in London, but hey, all of a sudden we're doing way more than that. So does that indicate that actually today we could end up doing more than the expected range? If so, you've got a little bit of a clue that actually there's money flowing in, there's some sort of reaction to something or other, people are interested in flowing money. So maybe now, instead of your traditional mean reversion trying to sell highs, buy lows, you might end up looking for some momentum ignition type trades, just because you've had a little bit of a heads up that the market conditions may well be slightly different. We may well be in the outlier section of that normal distribution curve. We may well get an extended day, an outside day, whatever it may be. And so, to not go back to the initial question, I've gone off on a tangent a little bit, I appreciate that. Easy way to do it, summarize it, just use your ATR, 24-hour chart, fine. You use your daily candle, whatever the platform decides as a daily candle, that's okay, because at least it's keeping it the same. So if it is from midnight to midnight, your time, then that's absolutely fine, because at least it's the same, and all you're really doing is comparing one ATR to the next one. So an ATR is obviously an average true range as well. Sometimes people have it set at 10. Sometimes I like to have it set at 1, so I can just see 1. That's an approximation for range. It's good enough in Forex, so you don't get many gaps, but at least the metric you're measuring, it remains constant, so it doesn't matter too much that. So that's a really good way of starting out. Use your ATR, 24-hour chart, a daily candle using the 24-hour session, fine. However the charting provider does it, that works well. If you want to go another level deeper to see if you can get a bit of a heads up, then splitting it into sessions, and again, depends on which charting platform you're using, depends on how you're doing it, how you do it. You might even, and it works great, just manually doing it, just coming into the day. Hey, I'm trading at the London session, I like to trade cable, whatever it may be. How has cable performed overnight? And you're probably doing that already, but then you just look at your range, you compare it to your range that you've written down or put in your sheet for the past week. Oh, actually it's quite big, or it's normal. Okay, it's normal. Maybe I should expect this to be a normal type day, right in the middle of that normal distribution curve. So great question. ATR is super useful, guys, because it just gives you, even though it's such a simple thing, the range of the day, it starts to give you a clue as to whether things are going to be a little bit spicy, and you might have to adjust your parameters. You might not want to get involved in it. You might want to get involved in it with different types of strategies. So really useful thing to have. A great question as well. Appreciate anyone else got any questions. Of course, send them in and I'll try to get to them on a video or in the comments. Take care. Bye-bye.